Good morning. It's Friday, the 12th of April, and this is Govindraj Ethiraj broadcasting and streaming from Mumbai, India's financial capital. Our top stories and themes for the day. Indian markets could be subdued today on mixed US inflation signals. Crude oil prices fall, balance between high US inflation data and increased Middle East tensions. Goldman Sachs and Morgan Stanley raise their China outlook. Tesla's likely investment announcement comes bang in election season. The link between infrastructure and new product innovations, the Tata Ace story. And the Cobweb effect in economics from tomatoes in India to cocoa in Africa.
This is a core report with Govindraj Ethiraj.
Indian markets could be subdued. Indian markets are likely to open a little lower today or subdued following higher than expected inflation numbers in the United States on Wednesday, which means that interest rate cuts, which were expected in June, are now being projected for several months later, which also means that capital will stay in or closer to debt than equity, whether on Wall Street or elsewhere in the world. The Dow Jones fell sharply on Wednesday. However, it did recover on Thursday after wholesale inflation numbers came in a little lower than expected and thus provided some relief. The S&P 500 rose marginally on Thursday as Wall Street, CNBC said, digested fresh inflation data. Indian markets were closed yesterday or Thursday for Eid and will reopen today. To recap Wednesday's movements, the BSE Sensex ended with gains of 354 points at 75,038 levels, while the Nifty 50 closed at 22,758, up 111 points. So the BSE Sensex is now above the 75,000 mark, and it has been moving fast. The Business Standard, which computed this, says it took just 80 trading days for the benchmark index to move from 70,000 to 75,000. The latest edition of 5,000 points is the third fastest since the index was established. And the fastest edition of 5,000 points came from August 13, 2021 to September 24, 2021, when the Sensex moved from 55,430 to about 60,048 in just 28 days, in what clearly was a post-pandemic recovery. The market capitalization of the Sensex as a percentage of the total market capitalization is at 37%, which, by the way, is the lowest compared to where it was when previous milestones were reached, says the Business Standard. Now, this obviously is because of the recent rally, or rather frenzy, in mid and small cap stocks, which has expanded the market. Crude is balancing between inflation and Middle East tensions. Crude oil futures fell on Thursday as worries about inflation overshadowed fears of a potential Iranian strike on Israel for the moment. June Brent futures fell 50 cents to about $89.90 a barrel, so under $90 a barrel. And oil prices had risen more than 1% on Wednesday following reports that the US and its allies were projecting or seeing an Iranian strike against Israel as imminent, according to the CNBC. Elsewhere, the Vienna-based Organization of the Petroleum Exporting Countries has left its estimates for global oil demand growth unchanged, but lowered its forecast for non-OPEC supply growth for this year and next. OPEC said in its monthly report it continues to expect oil demand to grow by 2.2 million barrels a day this year and by 1.8 million barrels a day in 2025. All these estimates are unchanged. OPEC also cut its non-OPEC supply growth forecast to 1 million barrels a day for 2024 from 1.1 million barrels a day, saying the main drivers of growth are expected to be the United States, Canada, Brazil, and Norway. Back to interest rates, everyone is watching the central banks for interest rate moves, and the European Central Bank usually is the second most watched after the US Federal Reserve, which of course is unlikely to do much in coming months. The European Central Bank kept interest rates at record highs on Thursday, but sent an even clearer signal that it may be preparing to cut them as Eurozone inflation levels continue to fall, according to Reuters. The central bank for 20 countries that share the euro currency kept its deposit rate at 4%, where it has been since September, as part of a 1.5-year effort to rein in prices, said Reuters. Interestingly, inflation in the eurozone is close to the European Central Bank's 2% target. However, bank lending is at a standstill and the economy is barely growing, And not surprisingly, says Reuters, the ECB has dropped fresh hints about a possible cut at its next meeting. Goldman Sachs and Morgan Stanley raise China outlook. Goldman Sachs and Morgan Stanley have raised their outlook for China's economic growth this year as factory activity and exports accelerate more than expected, according to Bloomberg. China's economy may have expanded at about 7.5% annualized pace in the first quarter from the previous 3 months, Goldman economists said in a note on Wednesday, higher than their 5.6% prior estimate. Goldman now sees a 2024 growth forecast for China at 5% in line with Chinese policymakers' target versus 4.8% previously. Morgan Stanley also lifted its 2024 growth forecast to 4.8% from 4.2%, saying that there was better than expected export growth from resilient US demand and robust export volumes. The Goldman report also projected stronger capital expenditure in the manufacturing sector, something that we also referred to from an Axis Bank in India report, and the Goldman report was dated Wednesday. The upward revisions come after a key gauge of factory activity indicated a fifth straight month of expansion in March, with official government data also showing a rebound. Exports, as we mentioned, have increased amidst rising global demand for technology goods, says Bloomberg. Goldman's economists also said that recent China macro data has been solid, adding that the manufacturing data suggests that the Chinese economy found a local bottom in late 2023 and now is on the way up. They also cited robust tourism, with spending above pre-pandemic levels recently. Meanwhile, Uday Kotak, founder of Kotak Bank, said in a tweet reproduced faithfully across websites that China was imploding economically. Strong words, and quite possible, of course, though it's also possible he knows something that Goldman Sachs and Morgan Stanley, who incidentally are quite bullish on India as well, do not know. Tesla's India investment coincides with election season. News coming in via Reuters suggests that Tesla's CEO Elon Musk is visiting India in the week starting April 22nd to finally announce a Tesla on-ground investment here. The proposition, of course, as you know, allows for sharply reduced duties on imports against a commitment of investment on ground. So let me expand that. Under the new EV or the electric vehicle policy, quite likely tailored for Tesla, companies that would set up manufacturing facilities for EV passenger cars would be allowed to import a limited number of cars at lower customs or import duty of 15% on vehicles costing $35,000 or more for 5 years from the date of issuance of an approval letter by the Government of India. Right now, cars imported as completely built units or CBUs attract duties ranging from 70 to 100% depending on the type of fuel, engine size, and the cost, insurance, and freight value, or above $40,000. Like I mentioned, Tesla's investment in India is priced in, meaning it's been announced so many times as imminent, including the size of car, price, and when it'll roll out, that a fresh announcement combined with a visit by CEO Elon Musk and a meeting with India's Prime Minister Narendra Modi appears to be more for the flashbulbs, or a small electoral nudge to voters for the general elections that start on April 19th. Nevertheless, Tesla's arrival has been imminent for a while, and an investment seemed forthcoming even in June last year when the CEO of Tesla, that's Elon Musk again, met India's Prime Minister in New York. Now, that, of course, did not materialize immediately for various reasons, including maybe the fact that Tesla wanted to export into India first and then explore on-ground investments later. So broadly, Tesla appears to have got what it wanted to, including the creation of an entirely new EV policy, which has been tailored to its needs, though it ought to benefit other car makers, particularly global ones, as well. The present government, of course, has been moving heaven and earth to get Tesla into India, though Tesla itself is grappling with a bunch of issues, including a declining market for electric vehicles and market share and a cratering stock price, apart from founder Elon Musk, who's grappling with other issues, including the going-ons at Twitter, now called X by him. Tesla's arrival into India is rightly seen as an Apple moment, as in the setting up of an advanced manufacturing ecosystem that will attract others into a higher technology and renewables space ecosystem. It's good if it happens, of course, though in what shape and form, or rather what precise shape and form, is something we have to see. The link between infrastructure and product and service innovations. Well, sticking to four-wheelers, Though moving on from cars to trucks, actually mini trucks, this is not a treatise on what infrastructure does or can do, because you would know that, but a single and yet illustratively powerful example that I came across of what the market can do when given new inputs, for example, in the form of infrastructure. Now, there is nothing, like I said, dramatically new in this theory or conclusion, but it gets a little interesting because of this particular example. On the Core Report's weekend edition, I spoke to Ravi Kant, former CEO and vice chairman of Tata Motors. It was in his tenure that the Tata Ace, a mini truck, was launched in 2005. Now, the mini truck as a concept has stood the test of time, clearly for about 20 years, and is now sold as Ace Gold in petrol, diesel, and compressed natural gas versions. Mr. Kant told me that one inspiration for the Ace was the increased road connectivity at the time, with more rural and urban areas getting linked. The quest then for a last mile delivery solution then led to the Ace, also a substitute for three-wheelers who were doing the job. In my conversation with Mr. Kant, which started off with a discussion on his book Leading from the Back, I asked him where the idea for Ace came from.
What are the kind of challenges then? Because at least again from the outside, it seemed like a lot of people felt that Tatas would not succeed in the passenger vehicle, because they said for decades it's only built commercial vehicles, many of them out of Jamshedpur, some from Pune and so on.
So let me go back a little, because I became the CEO of the company a little later in 2005, I think. So first 6 years, I was only commercial vehicles, looking after commercial vehicles. So that time, unfortunately, the market tanked. And commercial vehicles have very close connection with the economy, and therefore the commercial vehicle market tanked. But in that market itself, we were able to maintain our market share. But of course, we turned in our first loss in company's history. And that's the kind of thing I confronted, or I faced with when I joined the company. And therefore, how do you make the turnaround? And of course, a number of things were done. Cost reduction was one of the key ones, then new products and changing other things, so many things in marketing and all that. So we were able to convert a 500 crore loss in a 500 crore profit in just 2 years. That was a fantastic thing. And that's how people came together, because people's egos, successful companies have also a lot of egos. And so people said, no, it can't happen. But it happened to them. And therefore you challenge them. Now it has happened. Now let's pull up our socks and do something as a team. And things happened, and we came out of the woods, and we made a law. Again, another big thing happened is, introduction of ACE. We don't talk about that. But ACE created a market.
New market
which was equivalent to the existing commercial vehicle market. That is how big that transformation was, ACE. And it was a roaring success.
So ACE, for those who don't know, would be a small truck, right?
A small truck is the last mile connectivity, whether for urban areas or for rural areas. And it exceeded all our expectations. We were flabbergasted by the success of this. We had not thought it will succeed.
Where did the idea for ACE come from?
ACE, number of places, because one thing was there that time Mr. Bajpayee's Pradhan Mantri Gramin Sadak Yojana was going, and therefore these were getting connected. Rural areas and urban areas were getting congested. Then somebody suggested, why don't you have this kind of vehicle? So we put a team, and they went around the country. They looked at three-wheeler, because this need was being met by three-wheelers. They looked at three-wheelers, they looked at the need, they came with a fantastic product called ACE. And again, Tata Motors has this huge reservoir of talent as far as thinking in, I would say, low economy is concerned. They came up with this beautiful thing, and we launched it. We launched it first in Tamil Nadu. We sorted out all the problems. We made it come to, I remember, we launched in Tamil Nadu, and it was called Chota Hathi. So it became a roaring success, Chota Hathi. We started doing 600 a month, and then somebody said, no, it's not going to sell more and all that. So we said, no, nothing doing. In India, there's no such thing as can't be doing more. So we again challenged ourselves, and we reached a level of almost 1850 per month. Just one product in Tamil Nadu, which was our weakest market. As you know, our competitor had a very strong market.
Ashok Leyland, yeah.
Yeah, so we did very well. And then slowly expanded to entire South India. And then we took almost 9-10 months to go over the entire country.
And that model still continues today in roughly the same form and shape.
Yeah,
with some innovations
it's got
here and there.
variance. It's got variance for upper side, lower side, horizontal, all that, the whole idea. We built a whole new plant in Uttarakhand for this.
The cobweb effect in economics from tomatoes to cocoa. A quick look back at last year. You may recall tomato prices in July last year had crossed 200 rupees a kilo and then even beyond. Some 2 months later, farmers were dumping tomatoes on roads because there was just too much of it. This, as CRISIL chief economist D.K. Joshi pointed out to me earlier this week, as well as earlier, is the cobweb phenomenon of cyclical price fluctuations in economics. Perhaps the word is cyclic and not cyclical. It usually applies to agricultural goods and we see it frequently. This also makes vegetable inflation, currently running at 30% annually, tough to forecast because prices can crash as suddenly as they shoot up. It works like this. Low prices one season discourage farmers from planting in the next one. So prices skyrocket in the next season because of limited supply. This makes farmers increase the supply. Then the increased stocks must be sold immediately because of the perishable nature of their goods, and that causes prices to fall rapidly, setting that vicious cycle into motion once again. Now, there could be additional problems on some years, including this one, for example, because of heat waves, which could affect production and supply of vegetables in general and agricultural commodities as well. The same story is playing out in cocoa. You may remember us mentioning that cocoa prices globally had shot up to $10,000 per ton from below $3,000 per ton this time last year. Bloomberg is reporting how in Africa, the jump in cocoa prices, which of course is a key ingredient in chocolate, is luring farmers in some parts of Africa back to the bean. The lag between the time it takes to plant and harvest a cocoa tree means that the trend will not provide an instant fix for the strained global supplies, but it could ease the squeeze down the line, says Bloomberg. In the world's top 2 producers, that's Ivory Coast and Ghana, cocoa farmers receive a price that's set by the government and that ensures income predictability. But growers in Cameroon and Nigeria are free to sell to the highest bidder, and domestic cocoa prices in these 2 countries have more than tripled from a year earlier, thanks to that global shortage, says Bloomberg. In Cameroon, Bloomberg quotes the example of a farmer who's hired 2 extra workers on his small farm and has switched from growing plantains, groundnuts, and cocoyams back to the cocoa he had given up on 3 years ago when prices were lower. While Ivory Coast and Ghana account for more than 50% of global supply, farmers there have been hit by bad weather and a fertilizer shortage. Growers in South America are also keen to expand production to cash in on cocoa's high price. Ecuador, the world's 3rd largest producer, is targeting to increase capacity. So is Brazil by the end of the decade. Well, cocoa prices could rightly benefit farmers in Africa or Latin America down the line, but hopefully better storage solutions and logistics will ensure that we don't see a repeat of wild tomato price fluctuations in India this year, or at least if not this year, in coming years. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.